Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Beijing Enterprises Water Group Limited annual report. Beijing Enterprises Water Group Limited is a diversified investment holding company that provides various water-related services and businesses. The company operates through several segments, including sewage and reclaimed water treatment and construction services. This segment involves the construction and operation of sewage and reclaimed water treatment plants, as well as seawater desalination plants in countries such as China, Malaysia, Australia, and Botswana. The company also offers construction services for renovation projects in these regions. In addition to construction services, Beijing Enterprises Water Group Limited provides sewage and reclaimed water treatment services in several countries including China, Singapore, Portugal, Australia, New Zealand, and Saudi Arabia. This involves the treatment of sewage and reclaimed water to make it safe for reuse or discharge into the environment. The company also operates a water distribution services segment, which involves the distribution and sale of piped water in China, Saudi Arabia, and Australia. Furthermore, Beijing Enterprises Water Group Limited offers technical and consultancy services, including the sale of machineries related to sewage treatment in China and Australia. In addition to these services, the company is involved in the licensing of technical know-how related to sewage treatment, as well as the provision of urban services and hazardous waste treatment services in China and Hong Kong. The company also offers urban environmental governance services, construction services, waste electrical and electronic equipment treatment services, and sells recycling and reuse products. Overall, Beijing Enterprises Water Group Limited is a comprehensive water management company that provides a wide range of services and businesses related to water treatment, distribution, and conservation. Beijing Enterprises Water Group Limited market capitalization of $27 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that Beijing Enterprises Water Group Limited holds a significant advantage in their industry. Beijing Enterprises Water Group Limited trades at a higher price-to-earnings ratio of 17 times, and a higher price-to-book ratio of 1 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 66% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 6.32%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of the extracted summaries. On the growth side, overseas segment and certain regions in China such as southern China, northern China, Shandong, and eastern China have shown significant increases in revenue. These regions have experienced growth due to increased daily design capacity and actual processing volume. On the other hand, revenue decline has been observed in various segments including construction services for comprehensive renovation projects, technical services and sale of machineries, water distribution services in joint ventures, overseas water treatment services, and construction of bought water projects in China. These segments have experienced significant declines due to factors such as decreased demand and reduced capacity utilization. The analysis highlights that certain segments are experiencing significant revenue decline, including construction services for the water renovation, construction of bought water projects in China, and technical services and sale of machineries. In contrast, some regions are showing moderate revenue growth, with water treatment services and urban resources services experiencing increases of 2% and 4%, respectively. The net income of the company underwent a fluctuation in the given period. Initially, it decreased from RMB 186.8 million to RMB 123 million on page 31. However, by page 34, there was an increase in net income, although the exact amount is not specified. In terms of profit margins, the company experienced a decline across various segments. On page 33, gross profit margins for water distribution services in Chinese mainland decreased from 40% to 38%, while those for construction services for comprehensive renovation projects dropped from 16% to 15%. The only segment that remained unchanged was the construction of bought water projects, with a consistent gross profit margin of 17%. Despite these declines, there are indications of an improvement in profit margins by page 34. This is attributed to increased gross margins and other income, suggesting a potential turnaround in the company's financial performance. The company's financial performance is a notable aspect of its overall health. One key indicator of this is the generation of positive operating cash flow. According to the provided summary, the company has achieved an operating cash flow of $23,119,000 in 2025. This positive trend is further reinforced by statements on pages 38 and 3.17, which explicitly mention an increase in operating cash inflow. The confirmation of this information on page 38 adds credibility to the assertion that the company's operating cash flow is indeed increasing. While page 37 does not provide clear information on operating cash flow, the overall consensus from the provided summary suggests that the company is generating positive operating cash flow. This is a significant indicator of financial stability and health, as it demonstrates the company's ability to generate sufficient funds to cover its operational expenses. The company's debt level has undergone significant changes in the past year. While non-current liabilities decreased by a substantial amount of RMB 3.668 billion, corporate bonds non-current increased by RMB 2,695,680. However, total borrowings only saw a minor increase of plus 0.26%. This mixed trend suggests that the company has been actively managing its debt levels. In terms of interest expenses, there has been a significant decline. Total interest expense decreased by 27% from RMB 3.23 billion to RMB 2.37 billion. Interest on bank and other loans also saw a substantial drop of 31.2%, from RMB 2.73 billion to RMB 1.88 billion. Finance costs decreased by 31% as well, from RMB 2,732.6 million to RMB 1,881.6 million. These reductions indicate that the company has been able to reduce its interest expenses significantly. The company's performance across various segments has been mixed in the recent period. On a positive note, sewage and reclaimed water treatment services have been standout performers, boasting a gross profit margin of 124% and generating $5.28 million in segment results. Similarly, water distribution services have delivered impressive results with a gross profit margin of 131%, contributing $1.05 million to the company's bottom line. Urban resources services have also shown significant growth, achieving a segment result margin of 132% and generating $546,186 in revenue. In contrast, some segments have struggled. Water consultancy and sale of machinery services have incurred a substantial loss of -$1.68 million, while technical construction services have reported a loss of -$927,331. These underperforming segments will require attention to improve overall company performance. There is no significant activity to report on acquisitions and divestitures. The company has not made any notable purchases or sales of assets or businesses during the period under review. This suggests a stable and focused approach to its operations, with no major changes in its portfolio or structure. The company's financial performance is reflected in its dividend payments. According to the provided information, the company has indeed paid dividends, totaling RMB 505,087,000 as stated on page 13 of the report. This indicates that the company has distributed a significant portion of its profits to its shareholders through dividend payments. Concerns have been raised regarding the potential for inventory buildup in various sectors. Specifically, there are worries that large quantities of reclaimed water treatment, sewage water treatment, and desalination plants may lead to an accumulation of inventory. This concern is highlighted on page 25 of the report. Furthermore, a similar issue has been identified on page 29, where it is noted that actual processing volumes have exceeded total daily design capacity in operation overseas. This discrepancy suggests that there may be a mismatch between supply and demand, potentially leading to inventory buildup. However, despite these concerns, there are no specific worries about supply chain disruption. That concludes the financial summary for Beijing Enterprises Water Group Limited. Feel free to comment below, and I will be happy to answer them when possible.